In the equity quadrant today, a small rebound in the Nasdaq after 2 straight sessions lower. But the tech-heavy index has a long way to go before it recovers the last 2 days of lower prices, which as of yesterday's close had the Nasdaq down slightly over 2%. Now, despite that, the Nasdaq is still working on only its first down week in the last 6 and its second down week in the last 16. And that's good because according to a survey by Bank of America that was released today, allocation levels to tech by investors are now at the highest level since August of 2020. And obviously we're talking about the Nasdaq, so we're talking about tech. On the highs, as I speak to you, we're going to end up closing nearer to the highs than to the lows, but so far we're up a little bit less than 1%, 17,847, and on the low, 17,669.25. That was only down 4 basis points, so really a straight up day. We had some Fed speak today that had a little bit of effect on the market, sort of indirectly. Chicago Fed President Austin Goolsbee highlighted productivity as sort of the antidote to the hot CPI we saw yesterday. In other words, he thinks the market overreacted somewhat to yesterday's hot CPI print, and his specific mention of productivity references tech directly because productivity in this day and age, especially in the services-driven economy of the US, is tech. So as tech advances and as tech shares do better, that theoretically means more productivity because we get our productivity through technological advances. So that kind of speak not only boosts the tech sector a little bit, but adds to what we saw in yields today, which is basically no follow through in the increase in bond yields after yesterday's yield rally. As a matter of fact, today the 2-year dropped 8 basis points, 5-year dropped 8, 10-year dropped 6, and 30-year dropped 3. It's quite a bit to go to reverse yesterday's increase in rates that we saw. But again, the Nasdaq also has quite a bit to go to erase the last 2 days of losses.